Hi, let us now look at the lending segment of fintech business models. Lending as a category is underpenetrated. Plus, the lending business models need to take risk. Both the underpenetration and the risk element means there can be many winners. No one company would like to take all the risk. There are four key pillars of making a lending business model work. One is sourcing. How are you going to get potential borrowers to whom you can lend to come to you? Second, obviously, is the core underwriting. Third is collections. And fourth is how do you build a strong balance sheet to enable the lending business. Scale is critical here because you want to do a lot of transactions, lot of lending, lot of customers to reduce your risk. You don't want too much of concentration. And for getting the scale, tech is critical, technology is critical. And other key enabler for a successful lending business model is pricing the credit access correctly. So what are the examples? We have a number of examples. We have lazy pay, we have early salary in the consumer or BNPL space. BNPL stands for buy now, pay later. These are typical companies that lend for the use case of you buy now and pay later. Another subsegment in the lending category is the SME lending. You have companies like LendingKart, Oxizo, Incred in that category. Then you have peer-to-peer lending. You have companies like Credex. And you have lending marketplaces like Paisabazaar and Bank Bazaar. So there are subsegments within the lending segment. New business model in the lending sector. This sector has experienced significant disruption with the emergence of new business models. For example, peer-to-peer lending. P2P platforms connect individual lenders directly with borrowers, eliminating the need for traditional financial intermediaries like NBFCs or banks. These platforms leverage technology to facilitate loan transactions, enable individuals to lend money to others in return for interest. Next is online lending models. Online lending platforms streamline the loan application and approval process by leveraging digital technologies. These platforms use data analytics and algorithms to assess credit worthiness, allowing borrowers to access credit more quickly and conveniently. Third is a crowdfunding platform. Crowdfunding platforms enable individuals or businesses to raise funds from a large number of people, typically through online crowdfunding platforms. In the lending context, crowdfunding platforms may offer loans to businesses or individuals based on collective contribution from lenders. Let's now look at leveraging data and technology for access to credit, which is very important for lending models. The data and technology will provide faster and more convenient ways to access credit. For example, data-driven credit assessment. Lending platforms analyze various data points such as credit history, income, employment details, social media profile, and assess the credit worthiness of borrowers. This enables faster and more accurate credit decision. Based on this, you can price the interest because you are essentially pricing the risk. Second, you can streamline the application process through technology. So this means with minimal paperwork, you can give quick approvals. Borrowers can complete applications online, receive funds in their accounts within a very short period. This gives enhanced user experience. And with a user-friendly interface, they can apply for loans, track the applications, manage repayments, everything done through online portals or mobile apps very conveniently. Now let us look at the risks and challenges. Credit risk assessment. Assessing the creditworthiness of borrowers solely based on digital data and algorithms may introduce risks in accurately predicting repayment behavior and managing default rates. In a physical world, you go there, you look at where the borrower is staying, what is the community, what is the kind of business that he is in, what is the employment. You do a lot of background work offline. But here, the credit risk assessment is based on online, so it may be risky. Second risk and challenge is the regulatory compliance. Lending platforms need to navigate regulatory frameworks, including licensing requirements, consumer protection regulations, data privacy laws. Compliance with all these regulations can be complex and resource intensive. Third is a borrower protection, ensuring fair lending practices, transparent terms, and borrower protection are critical challenges for lending fintech companies. Appropriate risk management and dispute resolution mechanism should be in place to avoid negative publicity. Let's now look at some of the examples of companies in India. First, let's look at LendingKart. LendingKart operates as an online lending platform that offers working capital loans to small and medium enterprises. It leverages technology and data analytics to assess creditworthiness and provides quick loan approvals. So, what is the problem they are solving? The challenge of limited access to credit for small and medium enterprises is solved by providing a seamless online lending platform. The value proposition is in the ability to provide a quick and hassle-free access to working capital loans for SMEs, so that the SMEs can focus on their business, meet their short-term funding requirements, and fuel business growth. The differentiation lies in data-driven credit assessment algorithm which LendingKart has built that enables them to give quick loan approval. Its deep understanding and needs of challenges faced by SMEs gives it an advantage in tailoring the loans to suit the requirements. So, special focus on SME is another differentiation. Let's look at second example, a company called Incred. Incred is a digital lending platform that offers personal loans, education loans, and consumer durable loans. It uses again advanced analytics and machine learning algorithms to assess borrowers' creditworthiness and provide customized loan offering. The problem it addresses is faced by individuals in accessing quick and convenient personal loans and education and consumer loans. It simplifies the loan application process, reduces the documentation requirement, and also gives competitive interest rate. Fast and hassle-free access to loan is its value proposition, and improving the borrowing experience of individuals by leveraging technology and data analytics. The unique strengths is again quick approval using data and flexible payment options, customized loan structure based on individual borrower profiles. Now let us look at a third example, a company called Early Salary. It's a salary advance and personal loan platform that enables individuals to access instant cash before their next paycheck. It assesses the creditworthiness based on multiple factors, including social media profile, and disburses loans quickly through the mobile app before your salary will come into your account. So the challenge of short-term financial needs faced by individuals, because as the month runs, by the month end comes, your salary is due next week and you need some cash. That quick cash advance and personal loan is what it addresses. And it eliminates the need for traditional loan applications and provides instant credit to bridge temporary financial gaps, short-term lending till the time the next salary comes. So the ability to offer instant cash advances, quick loan dispersals, and flexible payment options is what is the value proposition of Early Salary. The differentiation is innovative credit scoring model they use, which incorporates alternative data points and social media profiles so that they can disperse instant cash through quick approvals. Let's take example now of BankBazaar. BankBazaar operates as an online marketplace that enables customers to compare and apply for various financial products, including loans, credit cards, insurance, and investments. It provides a platform where users can access multiple options and choose the best suited financial product for themselves. The challenge of time-consuming and complex process of researching, comparing and applying for financial products is the problem BankBazaar is solving. It simplifies the process by offering a single platform where users can come and compare. The value proposition lies in a convenient and transparent platform for comparing and applying for financial products, thereby saving time. Extensive network of financial institutions that BankBazaar has got, list of various product offering from these multiple institutions is a big differentiation. Single place where users can come to and see comprehensively various financial products from multiple companies is a big differentiator. Now let us look at Credex business model. Credex operates slightly differently. It operates as an invoice discounting platform that helps businesses unlock their working capital by selling their unpaid invoices to investors. So investors buy the unpaid invoices, in a manner of speaking, fund the borrower. This enables businesses to receive immediate cash flow by bridging the gap between the invoice issuance and payment. Normally, businesses have a 30-day, 60-day payment cycle to get from their customers. That gap is bridged by Credex. The challenge of delayed payments faced by business, which can hinder the cash flow, is being solved by Credex. So in the platform, the businesses can sell their unpaid invoices and receive immediate funds so that they can manage their cash flows effectively. Credex's ability to provide businesses with quick access to working capital by leveraging their unpaid invoices is the value proposition, so that the businesses can overcome the liquidity challenge. The differentiation is through invoice discounting, which is a unique solution to address working capital needs. Obviously, it is done through a technology-driven platform and wide range of investors on the platform who do the invoice discounting.